Taking a look at Twitter for kind of a longer term swing trade, maybe go 3 to 6 months out. The reason why I'm looking at Twitter here, coming off of those highs, I think it was $67, take us back to this candlestick here in October. So October 20th, we put in this top wick, 68.40. Let me see if we had another higher high there. Looks like we were kind of rejected in that 68.40. I guess all-time highs here on Twitter, 70. We're looking at 73.42 back on earnings. Yeah, so what I'm looking at here on Twitter going into 2022 is if we take a look at the most recent highs here, this $68 mark going back to the beginning of October, realistically, after these earnings here that were on the 26th of October, we had this gap down, big, long red bar candle. Anytime you see this after earnings and anytime you see us start to confirm those earnings lows, typically that's going to tell you we're going to be drifting lower. 9 times out of 10, go back and look at something on earnings that had a significant gap down. Look at when that stock confirmed those earnings low. Go ahead and take a look at the multi-day, multi-week kind of just fade, very, very slow and methodical to the downside. But what I do like on Twitter here, we do have these most recent lows in the beginning of December on the 3rd, $41 even, let's call it. Then we had a nice little bounce off that, got rejected at the 20-day moving average, kind of fell back down and tested that $41, $42 area, tried to bounce back, got rejected again at the 20-day moving average. And then you can see us here last Thursday before the new year kind of wrapped up, made an attempt once again at the 20-day moving average on the daily time frame, got rejected, had a little bit of selling pressure with the rest of the market on Friday. And now here we are again at the bottom of this zone, the bottom of this channel. Why do I like this stock for kind of like a longer term swing play? Maybe this does something for us within the next month here in January, but I want to give this enough time, especially if you're playing options. I want to go 3 months out, 4 months out, 6 months out, at least on our options contracts. If you're looking to day trade this, you're looking to scalp it. I don't really see anything from a scalping point of view until we get back up over 45.31. Sure, we might have a little bit of a bounce this week. Futures are up on the NASDAQ right now. It's still pretty early, but we're up about 86 points. S&P futures are up about 20. So yeah, we could completely get a dead cat bounce here. But the thing is that we got a lot of supply here. We got supply at 43.75. We have supply at 44.55. We have some more supply here at 45.31. What I would like to see on Twitter is to kind of break out of this downward channel. I think that this has been sufficient enough selling, although we never know when something's going to be done selling. But, Twitter never participated in any of the rally that the triple Qs had. It didn't really follow the FANG stocks. When the FANG stocks like NVIDIA or when Facebook and Microsoft and Amazon and Google and the NVIDIAs of the world, the AMDs of the world, when they were making their runs in the back half of the year, Twitter really didn't perform with them, just going back on the chart here to October. So we could get a little bit of a bounce. The thing is, it's going to get a little bit choppy in here. If you're a scalper, I think there's some room to be made on the scalping side. 50 cents, maybe $1 in Twitter. A lot of low risk in this stock, nothing too significant to where it's going to break your portfolio if you're in the move on a scalp on the wrong direction. Take a look at pre-market highs, pre-market lows, see if it confirms those prices. Do we hold? And you can get in for a quick scalp there, kind of take 50 cents, 75 cents off the table. But with that being said, for the swing trade, I would like us to reclaim this 20-day moving average. I would like to start a position here as soon as we can get a daily close over the 20-day moving average. I'm sure once we get that daily close over the 20-day moving average, we're going to put in a new high here initially, and then probably come back that same week we do close and back test that 20-day moving average. If we can hold, like let's say we close over the 20-day moving average, which right now that price is $44.57. Let's say we get a close over $44.50. Whatever that new high is, let's say it's $45.15. I'm expecting that week to come back down and back test at 20. As soon as we can confirm the back test, the break and retest theory, and then bounce off that 20-day moving average, that's when I think that we're going to have that pocket, maybe 1 month, 2 months, 3 months, hell, even the whole year here, because just to the fact that what's gone on with Twitter. But at least let's talk about the month window. We're going to have at least a month window to try to come back up here and start testing this 50-day moving average at around $48, $49. I think that's going to be a pretty sweet little trade as soon as we can get over that 20-day moving average. What would that give us? That would give us 45 up here to around 49. That's going to give us about a 4-point swing. If we can get a 4-point swing on a stock like Twitter in a month, that's going to be very, very good. A significant trade, depending on your sizing. If you go small, maybe you won't see the effects of a 4-point move over the course of a month. But if you take a decent amount of size and you kind of just watch what this stock is doing and kind of monitor your risk, I think it's setting up for a pretty sweet little trade here. What I will do is I am going to use this $41 as a hard stop. Let's say you do want to jump the gun. You want to get in early because you want a better stock price. If this stock breaks $41 and we close on the daily time frame below 41, we have to cut the trade. We have to stay disciplined. We have to follow technical analysis. This is the most recent lows. If this was to lose 41, let's say the market wants to correct this year. Let's say February, March, we want to correct 15-20% across the board. If this loses $41, it's going to get pulled, and it's going to get pulled pretty aggressively just due to the fact that it's never rallied. Okay. It never rallied when the triple Qs, when the SPY was rallying. So if the market does correct on the triple Qs on the S&P 500 and this loses this $41 range, we can get pulled significant, and you don't want to be caught in that. So let's just be smart about this trade. I want to set up these swing trades with super low risk. I mean, low risk with maximum upside potential. $41 absolute stop loss on this. If we can confirm the 20-day moving average, I'm going to get bullish. I'm going to get long, take a position, looking to hold this 1 to 3 months, looking for 4 to 5 points initially. And if we can confirm getting over this 50-day moving average, then we're talking back to that $50, $53 range. So that's one thing to look for on Twitter. If you're looking for a hot stock, if you're looking for a stock with low risk to get into a day trade, I mean, a swing trade in 2022, definitely look at Twitter's chart. Guys, if you want more information like this, I got a Discord. That link is down in the description box below. Come join, become a member of the community, completely free to join. I do have a gold member section where I do got some paid members in there, a little bit more active traders that are in the gold members. These people are kind of trading, day trading and scalping each and every single day. But I do have some people in there who swing trade. I've got people in there playing small caps, mega cap stocks, playing everything. We play everything. We don't discriminate. We go long, we go short. It doesn't really matter. We're here to make money. It's nothing like pumping stocks to the moon and buy this stock now and diamond hands because everything is going to the moon. None of that nonsense. You got to know how to trade short. You got to know how to trade long. And when you're trading these particular stocks, you have to have clear entries and exits because you don't want to get caught bag holding. Like if you're someone who's in this trade in between the $60 range and the $56 range, my question is, why are you continuing to hold? Why did you not cut when we lost this channel? And why did you continue to hold after these earnings? If you're in here at an average price of around $50 to $55, why are you currently holding? If you're not a long-term investor, meaning that you're not holding the stock for 5 to 10 years and you have not averaged down and you have not brought that $50 to $55 price down to maybe 45, right in that range. If you have not done that, why are you still in the trade? Okay. So let's be smart about this. Let's be realistic. Let's try to make some money. Let's find the best areas of opportunity. Best area of opportunity for me is going to be over 45, 46, initial price target 48, 49. And then after 48, 49, next price target, maybe 3 to 6 months out down the road, 53 to $55 zone. I hope that helps, guys. And I will see you guys all in the next video. If you guys do want to join that Discord, I will talk to all of you guys tomorrow morning at market open.